Welcome. This is lesson video part 6 of my 6-part trading lesson video series. This one is going to be covering funding rates, open interest, and spot premium. So these are going to act as kind of a confluence to your already good trade setup. Talk about just some basic definitions, like what these things actually mean, and then also some practical application for these when it comes to your trade setups. Now, before getting into all of that, quick shout out to my affiliate exchanges. BitNex Exchange, allowing US customers and others that might not be allowed to use the other exchange due to your location. So they set me up with an event, no KYC, no VPN needed for this exchange. It's a crypto trading exchange exclusively, but they're giving some bonuses until July 31st, setting up with little deposit bonus, a little trading volume bonus there. So check out BitNex if you need an exchange, if you can't use any of the others. I also have BingX Exchange, one of my affiliates. These guys are cool because they allow trading of crypto, Forex, commodities, indices. So check them out if you're interested in an exchange, allowing a bunch of different asset classes. Also, there's Bybit. So everyone knows Bybit, I think. Good crypto exchange, been reliable, although you can't use it without KYC. So not everyone can use this one, which is why I recently partnered with BitNex, where anyone can sign up and use this exchange. Check them out with my link in the description if you're interested and want to support the channel. Now let's get back to the lesson here. Let's talk about, first of all, the basic definitions. We have funding rate. What is funding rate? Well, it's a recurring payment exchanged between buyers and sellers involved in perpetual futures contracts on cryptocurrency exchanges. And so if it's in the green, it's positive. It means that long position holders are going to be paying short position holders. If funding's in the red, it means short position holders are going to be paying the long position holders every 8 hours. Okay, so that's as basic as it is. We'll talk about kind of what it means and get some more stuff about how to actually use it for confluence with your trading, but that's basically what it is. If you're in a position, you're in a long, and it's green, you're going to be paying shorts every 8 hours. You're in a short, it's red, in the negative territory, you're going to be paying the longs. Now, open interest. So this is the total number of open derivatives and futures contracts that have not been settled. So if you are currently in a long trade and it's not spot, we're talking about, for example, on Bybit, you are in a trade on Bitcoin USDT and you are using leverage, or you're on a margin trading, you're trading futures or derivatives, you are part of open interest. Are you in a short position on Bitcoin? You're also part of open interest. So it's total shorts and longs that are currently open is what it is. We'll talk about kind of how to utilize it in just a sec. Now, spot premium. Futures contracts, difference between futures price and the spot price. So you have the futures market, you have the spot market. When this is in the red, it's healthy. It means that the spot market is trading higher than the futures market. So think about this as the leveraged market is lower in price than the spot market. It's healthy. We don't want the market to be held up by leveraged traders and leveraged positions. That opens us up for a lot of shakeouts. So when it's in the green, futures, derivatives, margin traders, leverage traders are getting aggressive. They are boosting up that price of the futures market higher than the spot market. Not as healthy. It can stay there for quite some time in a really bullish trend, but it's not as healthy. Okay, so we want to see that the spot market is continuing to participate at the same level, or at least maintaining prices near the futures market. We want to see them kind of matching up with each other. When one gets too extreme, such as we go too extreme on the leverage side, it probably means we have a pullback, shakeout coming soon. And it's healthy when we see that in the negative. Spot buyers stepping in, don't have the leverage traders getting too aggressive, holding up that price on just leverage. So it's healthy to see that in the red. Okay, so that's kind of the basics of these. Let's kind of get through one by one. So context. As I've talked about many times, if you've watched my other 5 lesson videos in this series, context is important. So we're going to talk about trend direction. That's our context. So let's start with funding in the context of an uptrend. So we're in a bullish market, higher highs and higher lows. When we see funding go into the negative, that is a very good sign. So we can kind of mark in the times where we see funding go into the negative. And let's kind of expand this out here. What happens when we see funding go negative in an uptrend? Here, it's near a bottom. Things are getting healthy. Think of negative funding as a bearish sentiment. So this one, we go negative a few times on the way up here, and it's marking all our lows as we build up for this next huge move. Let's look over here. Go negative on this, go up higher. Here marks our exact bottom. Here we rally heavily and mark our bottom. And back here at our bear market bottom, we go incredibly negative on funding, and it marks our exact bottom. So think of negative funding as bearish sentiment. And a lot of people will know that the market can often be predicted based on sentiment. So when people are extremely bearish, that's when we see bottoms. When people are extremely optimistic, overly bullish, that's when we often see the end of a bull market or a local top, major top before a pullback or correction. So when we see these big spikes up on funding, we normally go into a correction or a pullback. So that's kind of what you see here. People are getting overly aggressive on the leverage, since this is going to be something that is exclusively seen with leverage traders. So we're talking about not the spot market here. We're talking about leverage trading. For example, if you're in a leverage trade and you're long, getting aggressive, and a bunch of other people are doing the same thing, we're going to see funding creeping up there, getting pretty high. So you can see on these really big moves to the upside, we'd start having a tough time once we get really high on that funding. Plus, people don't want to be holding a long position and when they're paying shorts this much. So it incentivizes people to go the other way. So if you're negative funding and you're holding a long position, it's nice to hold a long position and get paid to hold that position. It's not nice to be in a long position with super high funding and be paying a massive amount every 8 hours to the shorts. Okay. So that's kind of the confluence that we can use here with our already good trade setup. So if we saw a pullback that we want to trade and during the pullback funding went negative, it's a good sign. Then we can say, okay, I have a little bit of extra added confidence and confluence on this trade. If we got a buy signal down here, we saw negative funding on this push down. We saw negative funding on this push down here that marked our bottom. We saw negative funding on this push down that marked our bottom, but we also swept a low here. We also swept a low here. We also swept this low here. So it's a good sign that can go hand in hand with your other factors, okay? And then we start building up higher lows, higher highs here, and we see funding keeps going negative each time we push down. overly bearish sentiment. People believed we were going down here. Go back and watch my videos analyzing this exact section of price and see how bullish I was. Targeting 48K, which is exactly where we went out of there. So it works. You can utilize this to your advantage, okay? So that's kind of all you really need to see with funding. Think of it as bearish and bullish sentiment. Overly bullish sentiment, overly high funding rates. Overly bearish sentiment, overly negative funding rates, okay? And remember, we want to see bearish sentiment in the context of an uptrend, right? To mark bottoms of pullbacks and then look for that next continuation move. So it's a good sign when we start seeing negative funding creeping in the context of an uptrend. We can start thinking about, oh, okay, maybe we're getting close to a bottom. Bearish sentiment is getting pretty high, okay? So that's a good way to practically approach it. Think about it like that. At least that's how I do it. So I'm only saying how I think about it, not saying that you need to think about it that way, okay? Now let's talk about open interest. And specifically with open interest, I utilize it in the way of looking for flushes. So when we have a buildup of too many long positions in an uptrend, let's say, so our open interest starts getting really high, and then we see a big push to the downside, what we want to see is a big flush of open interest. So these big spikes down is where I am exactly what I'm looking for on a pullback, which is a shakeout of those built up long positions and perhaps some shorts closed as well. And then start rallying out of that big flush. And we see funding continuing, open interest continuing to drop. So we go for the flush on the longs after a buildup, flush them out, we start rallying up, and throughout that rally, we see open interest continuing to drop as we short squeeze out a lot of the built up short positions, okay? So what's a healthy thing about this current pullback? Let's go to a lower time frame. This is a build up of total open positions, okay? So when do we mark our bottom before this rally? Well, it's our only big shakeout here. So we have this build up of open interest. We keep going higher, we're trending up. And then finally, this last push down here is when we actually saw that flush out of open interest. So that occurred here. We finally saw a flush on the open interest right at the bottom here for this final leg down. Just 12 hours of price action there, flushing out those. Then we go up and we flush more there, flushing out some shorts. And as we continue to go higher, we see open interest is going up. But what we also want to take a look at is how's our funding as we go up on our open interest, total positions being opened. We actually went negative on funding here as we go into this uptrend. So a lot of this open interest is short positions in my eyes. So that's what that tells me is we never got too much on this. We actually saw this trending down here on funding as we were starting to come to the upside. Funding keeps going down as we trend up. We even went into the negative territory, which is really bullish in the context of this setup. So if we have a really bullish setup, which I've talked about on the channel doing the analysis, we sweep this major low here. As we sweep that major low, we get our big flush on open interest, right? We recover that low. We start seeing funding trending down. We go negative as we've just gotten this amazing buying opportunity set up here. We go negative and we keep rallying higher and higher, and we don't see funding getting too much. And open interest going higher, telling us that this still has room to run to the upside, and then we go up again. So let's go down to a lower time frame. So this particular push up that we just saw, notice how we go higher on price here, but at the same time, our funding is decreasing as we go higher, right? And then now, only now do we start creeping up on our funding. Open interest was increasing throughout this move to the upside, but funding was decreasing. So disproportionate number of shorts opening, more shorts than longs is how I read that right there, where we're going up, open interest going up, but our funding is dropping throughout that move to the upside. So that's healthy. That is a healthy move in my eyes, and I think it will lead us into some higher prices eventually, as long as this doesn't, longs don't start getting too aggressive. Okay. So when we have high open interest, what it's going to do is essentially open us up to a higher chance of volatility, because when we have a ton of leverage position open, it's easy for the big money to come in and flush people out one way or another. But if we have a big opening of leverage longs, it's easy to shake those out to the downside on a big flush to the downside. Big open interest rise in shorts, it's easy to flush those out by doing a short squeeze to the upside. All right, so let's take a look at a practical application for open interest. And this is going to be a combination of both flushes on open interest and also big increases in open interest. So what do we typically see? Well, I've marked it on here. This is a tool called Open Interest Flow by Quantified Tools. It's a free indicator on TradingView. I am just using it to demonstrate this in a very clear manner. So let's kind of zoom in a bit, starting over here. Big flush on longs here into that red territory on this indicator. What does that do? That marks our bottom. So we flush out the longs, the over leveraged longs. And then what do? We start going to the upside, big open interest on longs as we start coming up here. And then we start chopping up. And what happens, we kind of chop around for a bit. Let's see, where does that end? So on this push up right here, we come down and a lot of those longs close. We get a flush on those. So then we go higher. We start getting an opening of longs here right at that top. We go into a pullback. Okay. What happens is we rally a little here, get really aggressive, open interest, and we flush again. We come up again, aggressive opening, long positions majority here. And we go down. You can see there's some flushing in there, flushing out some of those longs. We go up, get extremely aggressive on the longs. We get into a pullback. We major flush on longs here. We continue higher. We get aggressive right here. And we flush them here and over here. Flushed, flushed. All right, go up here, big open interest, longs all buying the top. We go down, big flush here, temporarily bottom. We go up, guess what happens? We spike up and longs get overly aggressive. They buy the exact top here and we go down again, right? Longs down in this area, what do we have? Opening. We spike down, flush them, we go up. What happens is we have another opening, then another flush. We pull back. It's kind of marking our pivots most of the time here is open interest goes and spikes up. All the buyers buy the exact top before a pullback. They get flushed out at the bottom and then we go higher. So this is something that you can take note of, to not be one of these guys who buys on the open interest, massive spikes up. Instead, you can be a buyer when others are getting flushed out. Okay, so looking for these flushes. So what do we see? A huge flush, biggest flush yet right here. And this one actually goes into a downtrend. So what has happened is there's too much. We've built up too much, and then we can look at those other things like funding and funding rates and also the premium. But we did have quite an open interest spike on this move up here. We go lower, and so on and so forth. So you can see how it often marks these pivots. Of course, it's not perfect every time, but you can see how we go up, down, up, down, up, down, kind of in line with these big opens on open interest and then the big flushes of an open interest. Okay. So you don't want to be the guy who buys the top. Okay. That's why we buy pullbacks. Look for that flush. If you got a buy signal here and all your other criteria is met, you see that we also had that flush, then that just adds some confluence to the trade. Okay. Now let's go back over here and we'll take a look at our premium. So with this, the idea is to just think about it as an additional factor. This is probably the least important for me as far as actually confirming a trade or just having some added confluence. It could stay pretty high up there for a very long time, but what I like about it is some of the things on higher time frames. So when we went insanely negative here, this was so good that our spot price was so high compared to our futures. Mega bearish sentiment, right? At the lows here that marked our bottom. And where did I see something like this? Similar, actually. I saw it on Litecoin. So just the other day, a couple days ago, I saw a big spike here. So if we look back, we actually haven't gone this low in any of this history. This is the lowest we've been. That spiked down right at the lows. That was the bottom right there. Why do you think I made a bunch of posts about how bullish I was on Litecoin? This was one of those reasons, along with others, but this can help confirm what you have seen in your setup, okay? So if we looked back here, you can also see that we get really far down there, negative on our spot premium. So when others are getting incredibly bullish, getting aggressive with their leverage in one direction or the other, you know it's probably start time. It's getting close to time to start thinking about doing the opposite of that. Okay, so these factors, as I've been saying, you don't just trade based on these, but they can be lending a helping hand when you have a setup that's already there based on the factors that I shared from the last 5 videos. All those things are already in line. You have a setup you want to take a look at these things and be like, okay, I can confirm what I'm expecting to happen is probably going to be the case based on these factors as well. It's kind of just an added layer to your already good game plan. All right. So that's going to be it for this video. Healthy, negative spot premium. Don't want to see massive spikes of open interest. We do want to see flushes on open interest. Otherwise, we open ourselves up to volatility one way or another. Funding. If we're bullish in an uptrend, we want to see funding low. If we are looking for the potential for a top, we see funding getting pretty high. Maybe we have a good setup. All right, so that's it. Thank you guys. Have a great day.